I do think it is a breakage. It is kind of a warning shot from the financial system that things have gotten very tricky. And again, I do look at it as a break at this point. If he continues to tighten, it's only going to get worse. I mean, we had Goldman, JP Morgan, Citi, Wells Fargo bailing out FRC with $30 billion, and the stock's still tanking even after that. And you're still seeing Pac West drop and on Friday and stuff. So I mean, the question is too, is the crisis even over? Is there risk of contagion? I think that's got to be the big question. Could this deteriorate further out of control if the Fed keeps hiking rates?
We'll talk about Gareth Soloway's bold prediction about whether or not it's time to sell your Bitcoin in this interesting video. Bitcoin's price has gone up and down a lot in the past, and it can be hard to know when is the best time to sell. In this video, we'll look at Gareth Soloway's expert analysis of where Bitcoin is now and whether or not it's time to act. Soloway says that this rise shows that people are becoming more confident in these currencies, which is leading to more investments in the financial system. Due to recent problems in the economy, investors are looking for other ways to put their money to work. Soloway thinks that investors who leave the fiat system to invest in cryptocurrencies do so because they want a more stable investment option. Soloway thinks that the Fed will be able to save face if they raise rates by 25 basis points after their meeting. He thinks that after the price goes up, investors will be even more interested in cryptocurrencies, which will cause their prices to go up even more. Let's watch the video and listen to Soloway talk about how the Fed is tightening the SP unemployment rate and Bitcoin. Make sure to click like, subscribe, and a comment.
Let me bring up my charts here. We'll take a look. So what we can see here is that this is the S&P 500 chart, right? And so we've basically been, and I think people don't kind of recognize this, but what I've seen is that since really June, the markets have been in basically a chop fest, right? We've just been going sideways here. And so one of the things that I saw recently with this banking crisis is we actually broke below this trend line that's been sloping up. So to me, that's getting my attention. I want to see, do we rally next week? Do we retest that line, maybe get above it? But right now, I do think the markets all are vulnerable. And I still have it priced in that the second half of 2023, I do see us not only retesting the lows from October, but then starting to actually go down to some of these targets, maybe even as low as 3,000. So I'm in the camp where I do think that we're in for a recession. I think that, anyone who says we're not, it's going to be some soft landing. I mean, again, show me a place where the Fed has hiked this quickly, this fast, with this dramatic rise in rates. And I can't imagine us getting away with no recession whatsoever. So I think investors in stocks have to be aware of that. And I think if you factor in a recession, even a mild recession, valuations to me are still way too lofty in many of these names. You have seen companies, at least mega cap companies, laying off significant amounts of people, and it hasn't really had an impact yet. I am in the camp that at some point there's like a mountain kind of cliff where we do roll over it and you do see a spike, but it may take a little bit more time than even the next couple months. I do wonder though, what type of jobs, right? So the job openings that I'm seeing are not necessarily the tech jobs, the Microsofts. I mean, like the Microsofts, the Metas, they're not hiring, right? But it's more like the McDonald's, the workers, So it seems like it's a type of job.
Construction,
and I wonder if,
industry, service.
Right. Yeah, exactly. So it's not necessarily the super high paying jobs that people want. It's more like the ones that had to raise their salary from or $12 an hour to $20 an hour that are still trying to get workers. And again, the question is, will enough people that lose their jobs at Twitter will they be looking for jobs in those places, or do we just have a shortage of those particular workers? It has money now rotated over the last few days into the NASDAQ, but also crypto. I mean, and not so much the altcoins, but Bitcoin and Ethereum. This is like their first test case in a long, long time, right? Their first banking crisis since the inception of Bitcoin. And you've absolutely seen a huge amount of money roll over into cryptocurrencies, specifically Bitcoin and Ethereum. And I think that's fascinating. You think about the reasoning behind the creation of Bitcoin, and here we are. I mean, this is just one of those use cases for it, and I think it adds credence. I'm still not in the camp where I think that necessarily the lows are all the way in on Bitcoin or Ethereum, but you can't deny that this just strengthens the case long term for why we need Bitcoin. And that's part of my issue with why I just can't see that the markets have fully bottomed, because you still see so much speculation in the market. I mean, people are just itching for 2021 all over again, like a drug addict, they're scratching at their skin. So yeah, I do think that it's at this point where like investors got to still be very wary, right? The Fed isn't going to, number one, the Fed's not going to just go to cutting rates, right? They're not going to, you're not going to see this all of a sudden, this massive pivot where interest rates miraculously go back to 1% on the Fed funds. I mean, it's just not going to happen in a long period of time. Now, are they going to finally pause? Yeah, I think that makes sense. Maybe drop rates by 2024 a tiny bit, but I just do not see them dropping rates all the way back down. And if they have to do that, the economic situation is going to be ridiculously horrible for them to do that in. So you have the Fed potentially, instead of a 50 basis point, which prior to last weekend we were kind of thinking about, now all of a sudden 0 or 25, and obviously most likely a pause after that. And then also, I think that there was this massive amount of money that flowed from bank stocks and the markets into Bitcoin, which helped push it up like we see it on the chart in front of us. And so I think it's a combination of that. I do think that once the banking situation calms down, you do see some of that money come out of crypto in terms of Bitcoin and Ethereum, but it certainly was part of that. And we saw it in gold, right? I mean, gold has had a massive run up as well. And if we think about it logically, just, the Fed going to 25 or to 0, it's not like they're dropping rates, so it doesn't necessarily tell us that gold should be ripping north of its all-time highs, but we are getting pretty close because of some of the money flow, the people taking kind of a protective measure here in these assets. Yeah, so I'm still in the camp, as of now, Bitcoin, and again, this might sound crazy to some people, but I'm still not in the camp that we've put in a low. I don't have the factors in place on a chart that tell me that the low is in for this entire cycle. And the main reason for that too is if you zoom out on the chart, right, if we look at this bigger picture, this again is a nice bounce. It's a fantastic percentage-wise bounce off the lows. But again, we haven't even recaptured this area here. And this is kind of my line in the sand, this 30,000, 30,500 level. So as long as we stay below that, I'm in the camp that we still can roll over. We can still maybe make new lows. I don't think, for me, it's not so much that Bitcoin is going to have another FTX scenario necessarily. It's more to me that I do believe the traditional markets are going to have a major drop. And if that happens, I'm still in the camp that Bitcoin is going to struggle as it will spread. The kind of the panic and the fear will spread across all asset classes. Maybe not so much gold, but even gold could see some selling.
There are now signs Bitcoin's price is starting to move in a different way than stocks. According to Coin Metrics, the correlation between cryptocurrencies and the S&P 500 is now at its lowest level since September 2021. The correlation was at its highest level in 2022. Bitcoin and Ether have done well so far this year, but the value of gold and the dollar US stocks and bonds were not hit as hard last year, but they haven't come back as quickly either. And tech-heavy indices haven't done much better when high-growth assets have been hit hard during a rising rate cycle. What do you think would be the next path of this contagion? Let us know in the comments section. We hope you found Gareth Soloway's insights and predictions valuable in helping you decide whether to sell your Bitcoin or hold on to it. Remember, when it comes to investing in cryptocurrencies, it's always essential to do your research and consult with experts like Gareth Soloway. If you enjoyed this video, make sure to give it a thumbs up and subscribe for more content like this. Thanks for watching, and we'll see you in the next one.